Imagine it's Black Friday. A global retailer is processing thousands of orders a second, and suddenly their payment processor just goes down.
Oh, an absolute nightmare scenario.
Right, in a legacy system, 10 minutes of downtime doesn't just mean a spinning wheel. It means like millions of dollars instantly evaporating. You click pay now and it just fails.
Yeah, completely dead in the water.
So today on our deep dive, we're looking at the hidden world behind that button, next-gen acquiring architecture. We've got a stack of technical breakdowns on how modern global commerce actually avoids that massive downtime and, those crushing fees by ditching legacy single processor setups for intelligent modular layers. Okay, let's unpack this because getting a transaction from a checkout page to a bank is, well, it's a lot more chaotic than just a single invisible wire.
Oh, it is incredibly chaotic. I mean, in the old days, merchants relied on a single monolithic processor. It was just this all or nothing pipe.
And if that pipe burst,
Sales stopped completely. Yeah. But now the industry is moving toward gateway orchestration. Essentially, it's one technical integration that acts as a central hub connecting merchants to multiple global payment methods.
like U.S. cards or Brazilian PIX, things like that.
Exactly. Local banks, too. It's a traffic control tower that instantly switches over if one provider goes offline.
So instead of laying down a single railroad track,
Yeah.
you're building a whole network. It kind of reminds me of using a smartphone GPS app when you're driving.
Right.
In this scenario, the gateway is the GPS app calculating the route. The specific bank or acquirer processing the payment is the actual highway you take, and the fee, the interchange, is like the toll on that highway.
That analogy maps perfectly onto what we call smart routing. Because the system isn't just looking for an open highway, it's looking for the fastest, cheapest one in real time.
Wow, okay. How does that play out in real life?
Well, say you're using a UK-issued credit card to buy a flight on a US airlines website. If that goes straight to a US bank, a US acquirer, it looks like a cross-border transaction.
Which means higher fees, right?
Yeah, that triggers higher scrutiny, potential fraud alerts, and really steep fees.
But if the GPS, the gateway, sees a traffic jam on that cross-border route, it just redirects you. It spots the UK card and instantly sends the payment to the airline's UK-based acquiring partner instead, completely bypassing those international tolls.
Precisely. The approval rate jumps from about 75% to 95%, and the merchant completely avoids the cross-border fee. What's fascinating here is that the system dynamically evaluates the currency, the card issuer, and processor uptime in a matter of milliseconds to make that choice.
So smart routing gets the transaction to the right bank on the best highway. But that perfectly calculated route is useless if the card itself breaks down. Meaning, what happens if the underlying card data is stale or expired? The transaction is going to get declined anyway.
Which used to happen constantly when legacy setups just stored a 16-digit card number in a static database. Next-gen architecture solves that data problem using dynamic tokenization via Visa or MasterCard network token. These tokens act as permanent digital aliases.
Wait, I want to trace the logic on this alias thing. If I lose my physical card and get a new one, my streaming service just keeps billing me automatically without me lifting a finger. How does the token actually know?
Because the token itself isn't the card number, it's just a pointer to a highly secure database operated by the card networks. When your bank issues a new card, Visa or MasterCard updates the real number inside their secure database.
Oh, so the alias never changes.
Exactly. The pointer, the token that the streaming service holds, never has to change. It just seamlessly redirects to the new card. For the business, it preserves revenue. For you, it's a completely frictionless experience.
Here's where it gets really interesting, though. Every millisecond of this process isn't just about saving a sale, it's an opportunity to save money on the transaction itself. The toll on our highway isn't a fixed price, is it?
No, it is highly variable. Every transaction carries a fee, known as interchange. If a merchant runs, say, a $5,000 corporate purchase, but only sends level 1 data, which is just the basic card number and amount,
The algorithm gets suspicious.
right, the network algorithms view that as a potential risk. A higher risk means a higher fee, say 2.70%, which costs the merchant $135.
But we can change that math by just giving the algorithm more context through interchange optimization.
Yes. The next-gen system automatically enriches the data payload before it hits the network. It attaches level 3 data, We're talking about line item details, the exact tax amount, the specific invoice number, corporate zip code.
Which fundamentally changes the risk profile. I mean, a fraudster using stolen card numbers on the dark web isn't going to generate an itemized corporate invoice with exact local tax rates. By sending that data, you're mathematically proving to the algorithm that it's a legitimate purchase.
That proof drops the transaction into a lower risk tier. The fee drops to 1.80% or $90. The merchant automatically saves $45 on that single transaction just by communicating better data in the background.
Wow. So you have this rigid single processor lock-in on one side and this dynamic auto-cascading system actively fighting for the best outcome on the other. So what does this all mean for you listening right now?
Well, as global commerce demands absolute uptime and tighter margins, the background mechanics simply have to evolve. Businesses can't afford a single point of failure anymore. Understanding the shift from a single pipe to an intelligent, multi-layered network shows you how the global economy stays afloat, routing around outages and optimizing costs without anyone noticing.
It really makes you look at that tiny spinning wheel a bit differently. Next time your replaced credit card magically works on your favorite app without an update, or that Pay Now button clears in just a fraction of a second, ask yourself, what other invisible data enrichments are quietly optimizing your digital footprint behind the screen?